Hey everybody, this is John and welcome to the free video. And I did see some more exciting news today about all the reasons we should be bearish. Keep in mind that, at the end of the day, never fight the squeeze. And this is the monthly squeeze. It's still going strong. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 dots in. 8 to 10 is the average. It can go higher, and I certainly think it's, this isn't the place to make huge bets toward the end of the move. But keep in mind, if this was a 5-minute chart, I wouldn't be getting all excited about the short side here. I'd be trailing stops, and that's kind of the idea. So the question is, are there any trades worth taking at these lofty levels? Well, Amazon has been trading sideways since its earnings, and it's building up energy on the 195-minute chart, and this thing is ready to go. So I love this setup here. Keep in mind that while it's also a tech stock, it is also part of it's not staples. It's certainly not staples, but it certainly is discretionary, and it is part of the consumer discretionary sector. And if we look at the monthly chart on this, you can see that we've got a squeeze in there as well that's turned back up. So I like that Amazon trade. And then the other one here that we've been watching and discussing is Netflix. And you can see Netflix had a monthly squeeze there. And if we look at a daily chart here, we've got a daily squeeze that's just rotated. And if we drop down to a 195-minute squeeze there too, or 195-minute chart, we've got a beautiful setup there. So on this one, and I'll talk more about this in the premium video, the question is always like, well, all right, so if we bought 10 lots here and we think this is going to go up to the tree line, and that would be my target here is that 203, well, the 190 is at a 10 lot, that would be, if we got up to that level, that'd be $4,500. And the question is there an easier way to make $4,500 on this trade? And the answer is yes. And so if you're in, if you understand premium and which ones to sell, and so just keep in mind, anytime I say like, hey, wow, this is a bullish trade, it doesn't mean you just have to buy calls. You can structure the trade in such a way that you can have the same potential profit as the position size of the directional trade you're going to take and do it in a much safer way. And so I'll talk about that more, and I'll show you how I structured it here in the premium video, but be sure to check that out. So that's Netflix. And then the only other one I was looking at here, because obviously, tomorrow's Wednesday and then the markets are closed. So I'm anticipating that things will be quiet. We did have earnings on Bison today after hours. It's down a little bit after hours. This stock has very high short interest. So I'm going to keep an eye on it in the morning to see where it's trading for some potential trades in the morning. Okay. And then from there, I want to keep an eye on NVIDIA, which also doesn't have a squeeze setting up, but we do have a nice kind of a rounded, you could almost call that a glutamus maximus cheek, but that is that nice kind of rounded bottom setting up for a pop as well. So when I see that, I like to drill down and say, well, is there any squeezes on any smaller time frame? And it's like, man, there's nothing on the 38, or nothing on the 78, nothing on the 30. Is there anything on the 15? There's a 15. So 15 is not going to not potentially a huge move, but certainly tradable. Potentially move up to that 220.58. So I like that for tomorrow. All right, so just a reminder, we do have a free webinar coming up on November 27th. So plenty of time to think about this one. It's a free webinar, and we're going to have Bruce and Raghi talk about a free concept in terms of how to instantly and objectively identify strong trends. Okay, so one of the things I talked about in the premium video tonight was the difference between a trend and a stock like Red Hat, okay, RHT, versus something like Netflix. One's a very, very strong measurable trend, and the other one's a little sloppy but playable. And so what is the difference in those, and how do you play them? Well, what Raghi and Bruce are going to be talking about is, first of all, a couple of points on it is, one, why you don't actually have to be a chartist to identify strong trends. Okay, and that's something that sometimes people get caught up in, is like, oh my God, I got to have, I got to know how to read the chart. Well, you don't necessarily need to know exactly how to read it if you understand kind of the concepts here that Bruce and Raghi are going to talk about. How dynamic support and resistance can help you time the trades, how to know when a trend is correcting or reversing, and know it with confidence so you don't get shaken out. Okay, and that's always frustrating, and how to objectively measure trend strength with some of Rogge's free tools. All right, so it'll be pretty awesome, lots of fun. Rogge and Bruce always tear it up when they're sharing information together, and it's going to be really cool. All right, you can just sign up right there, and you'll be good to go. You guys have a fantastic evening, and we'll see you at the next update.